Welcome back. Another problem wherein we have to calculate the working capital requirement. Now, this problem is slightly different from the previous one, wherein here we have to find out the net working capital required at cash cost. Now, what do you mean by that? Now, when you are asked to find the net working capital at cash cost, it means valuation of debtors, DEBTORS, valuation of debtors should be at the cost of production. Now, why should you calculate debtors at the cost of production using cash costs? It's because selling the profit involved in selling price does not involve any physical cash flow. Again, I repeat, at cash cost, when you value debtors, we value it at the cost of production and not at selling price, because the profit involved in the selling price does not involve a physical cash flow. Similarly, depreciation here it's given. Now, depreciation also does not involve a physical cash flow. Therefore, we have to ignore depreciation. Otherwise, everything is the same like the previous problem. The only thing here again is we calculated at cash cost. All right, so production per week. One lakh 4,000 divided by 52 weeks gives you 2,000 units per week. All right, so that is the level of activity. Now, statement showing net working capital. Remember, what is net working capital? Net working capital is nothing but total current assets minus current liabilities, okay, at cash cost. Okay, so show current assets. So the first current assets here is raw material. So it will be 2,000 units into the rate of raw material per unit 80, and raw material is in stock for 4 weeks. So that will be 6,40,000. Next, work in process or work in progress, WIP. Now WIP will be 2,000 into, now here the cost of production is 170 unit, which comprises of raw material 80 rupees, labor 30 rupees, overheads 50, and depreciation 10. All right. Now, like I said, at cash cost we have to ignore depreciation because depreciation does not involve a physical cash flow. So therefore, it will be 2,000 into 160. We have to ignore depreciation. All right, ignore depreciation into how many weeks? 2 weeks into 50% done, so 50 by 100. All right, so it will be 2,000 into 160 into 20 divided by 2. So 3,20,000. 3,20,000. Next, finished goods. Okay, finished goods also will be 2,000 into 160. Again, cost of production will be 160. We ignore depreciation, 10 rupees, into how many weeks? 4 weeks. So that will be 12 lakhs 80,000. Next, creditors or debtors, credit allowed to debtors. So debtors, now debtors will also be valued at what? At the cost of production. I told you it will be at cost of production because the profit involved in selling price does not involve a physical cash flow. So 2000 into 160 into 8 weeks. So that works out to 25 lakhs 60,000. And then you have cash at bank, which is 25,000. So add that, add the total current assets, you will get 48 lakhs 25,000. All right, so we're done with current assets. Now find out current liabilities. Current liabilities. What are the current liabilities here? You have two. Credit allowed by suppliers, so those are your creditors, and lag in payment of wages, outstanding wages. So creditors will be 2000. What do you buy from your creditors? You buy raw material, right? So what is the cost of raw material per unit? 80. So 2000 into 80 into 4. That will be 6 lakhs 40,000. And outstanding wages. Outstanding wages. What is outstanding wages? So it will be 2000 into, what is your labor per unit? 30. 30 into 1.5. Okay, so that works out to 90,000. So if you add up, it comes to 7 lakhs 30,000. Okay, 7 lakhs 30,000. So therefore, your net working capital, your net working capital is equal to current assets minus current liabilities, which equals to 48 lakhs 25,000 minus 7 lakhs 30,000, and that works out to 40 lakhs 95,000. Plus you have to add, see here, 10% for contingencies. So add plus 10% for contingencies, okay, which equals to 4 lakhs 9,500. So that for the total will be rupees 45 lakhs 4,500. All right, so that is your net working capital at cash cost. So there we have it. Okay, there we have it. By the way, I will put a link in the description box where you can get the image of this problem as well as the reading material on working capital management.